Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you still thinking about?
Glad you're here. Welcome to Modern Investing Techniques, episode 38 for May 10th, 2026. I'm Patrick, coming to you from Vancouver. Here's your daily market intelligence and today's practice trade. Quick reminder, even a thing we discuss here isn't for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Earnings from AtkinsRealis and Manulife this week give Canadian investors in financials and industrials a clear window to position ahead of results that could shift sector rotation. Markets opened higher today with the S&P 500 at 7,399, up 0.8%. The NASDAQ Composite sits at 26,247, up 1.7%. The TSX Composite is at 34,078, up 0.7%. Analyst upgrades in AI names and insurer earnings are providing support, though geopolitical and tariff caution remains in the background. Keep an eye on volume during any earnings reactions today. The portfolio is flat year to date, while the NASDAQ is up 12.96% year to date. Analyst upgrades after strong quarterly prints can create short-term momentum when accompanied by sector rotation, but only when volume confirms the move. Today's upgrades for AMD following its Q1 beat illustrate how Wall Street revisions often lag retail awareness of data center demand. To implement this approach, screen for names with at least 2 upward revisions in the prior week. Then check the 20-day average volume before entry. This approach has historically delivered the strongest alpha in the first 5 trading days post-upgrade during earnings seasons. Yet it carries the risk of fade if broader index momentum stalls. Always size positions below 5% of the portfolio to avoid overconcentration when the signal is only medium confidence. Now let us move to the simulated trade we are running this week. Disclaimer, this is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's pick is HMN, Horace Mann Educators Corporation, listed on the NYSE in the financial sector. The strategy is an earnings momentum play on record quarterly results and improved return on equity. The hold period runs from Monday through Friday. The catalyst comes from Q1 26 results that showed record earnings and a 12.7% return on equity, exceeding typical insurance sector benchmarks. On the technical side, the stock has traded above its 50-day moving average on daily charts with volume near the 20-day average. Nearest resistance sits at recent highs. For risk assessment, a miss on forward guidance could trigger a 4 to 6% pullback, so we set a stop loss at 5% below entry to cap the simulated loss. The target is plus 3% to plus 6% over the 5-day hold if the earnings reaction sustains. Confidence level is medium because the strong fundamental print and return on equity improvement align, yet sector rotation into financials remains unconfirmed by broad volume. This trade demonstrates how to evaluate an earnings catalyst using reported return on equity and earnings and figures rather than hype, while enforcing strict position sizing and stop discipline. Listeners learn to wait for concrete quarterly data before committing capital in the financial sector. Before we check how last week's trade performed, here is the exact lesson this week's pick is designed to teach. Last week's weekly hold was AMD as a momentum play on data center growth and AI infrastructure demand after the earnings beat. Entry came at $360.31 on Monday's open. Exit was at $408.46 on Friday's close. The position gained 13.36%, which is plus $133.63 on a $1,000 simulated position. The earnings-driven momentum worked because data center demand exceeded expectations and sector rotation supported the move. Yet the results still lagged the broader index in cumulative terms. The rule extracted is to always require volume confirmation above the 20-day average before entering momentum trades on earnings beats. That volume discipline ties directly into today's strategy spotlight on how Wall Street revisions actually work. Now that we have covered the mechanics of upgrades, let us build the foundational options knowledge every TFSA investor needs. Imagine you own 100 shares of a Canadian bank trading at $85 in your TFSA and want extra income without selling the position. A covered call lets you sell the right for someone else to buy those shares at a higher strike, say $90, collecting a premium upfront. That premium is your income, but you cap upside if the stock surges past the strike. Calls give the buyer the right to purchase at the strike price, while puts give the right to sell, creating protection or bearish bets. The key Greeks are delta, which shows how much the option price moves with the stock, and theta, which measures daily time decay working in the seller's favor. Before trading, pull up the options chain on your broker platform and compare open interest and bid-ask spreads across expirations. The biggest mistake beginners make is selling naked options without collateral, exposing them to unlimited losses. Instead, always start with covered calls on stocks you already own and would happily hold at the strike price. With the options basics locked in, here are 2 free tools that give you the same data the institutions use. The Seeking Alpha Earnings Transcripts tool lets free and premium users pull full earnings call transcripts and slide decks within minutes of release. This allows rapid comparison of guidance versus consensus and gives individual investors the same data institutional desks use to model revisions. Access it directly from any stock page under the Transcripts tab. The Motley Fool Stock Screener lets you filter for high-yield dividend payers with consistent payout history and low payout ratios to identify income candidates quickly. The tool surfaces exact dollar amounts needed for target annual income, helping TFSA investors size positions precisely. Use the Dividend tab and set yield minimums above 6%. Now let us take a rapid-fire look at the week ahead and a few names worth watching. Earnings from AtkinsRealis and Manulife are scheduled this week. Canadian investors holding industrials or financials should prepare for volatility as 2 major names report. Add both names to your earnings calendar watch list and review position sizes before Tuesday's open. 2 pure-play space companies offer differentiated exposure to satellite and lunar contracts. Compare MDA Space and Intuitive Machines on your screener for contract backlog growth before adding either name. Analysts see continued data center leadership for NVIDIA despite valuation concerns. NVIDIA is projected to outpace Alphabet and Amazon combined over the next 3 years. Trim any overweight in mega-cap software if your portfolio already exceeds 25% tech concentration. Signs of iPhone demand stabilization appear after recent weakness in Apple. Wait for a retest of the 200-day moving average before adding AAPL exposure. Before we wrap, open your brokerage platform, pull up the options chain for any stock you already own in your TFSA, and calculate the annualized yield on the nearest out-of-the-money covered call expiring in 30 days. That is your one action item for today. I have my eye on how volume develops around the Canadian earnings reports for tomorrow's update. That wraps up today's Modern Investing Techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.